Hello everyone. Whose house is this? Doug Ford's. Who is Doug Ford? The brother of the infamous Rob Ford. Some of you may like him, and some of you may not. And we all have our reasons if you live in Ontario. His house was listed at $3.2 million and dropped $400,000 after being relisted 2 weeks on the market. Why is this? Let's get into it. Now, essentially I'm attempting to use Doug Ford's home as an example to explain how the housing market that seems to be taking a nosedive in specifically places like Toronto, Calgary, Alberta, and Vancouver, British Columbia. With rising interest rates, credit has heightened tremendously, and that seamless buying system and closing a deal was very, very clean when there was an abundance of money flowing through the system. One of the places in the housing market with the biggest concern is the new building segment. In the new building segment, a lot of buyers rely on the idea of being able to sell their home, make a profit before actually taking possession of the home. And this is what you would call an assignment, which leaves them with a mortgage or a home that they couldn't afford prior to that situation. In some of these cases, we're watching almost up to 4 different people having to put their name on the lease in order to even attain the mortgage for the home. A huge issue, because that means a lot of the times the two who are going to be maintaining the home or in hopes of maintaining the home simply just can't afford it. In other cases, people are finding themselves now in a position of coming up on refinancing the home and having to face the issue with the bank of going from a 1.89% interest rate all the way up to a 5.89, give or take. Inflation. In some cases, the amortization period is stretched to upwards of 40 years in order to allow the individual to just afford the mortgage on the home, which is crazy to think of you paying a house or trying to pay off a house for 40 years. At the end of the day, we're not able to prepare for situations where inflation begins to run rampant, food prices begin to hike, and let's say situations where you could be at a loss of work, just like how people were at a loss of work in COVID, and all these different things that can allow our daily income or our yearly income to start to depreciate and go to places where we didn't expect them to. Another example is things like gas prices. All of these things we were not able to account for. So bottom line is you need to put yourself in a position where you don't extend your pockets all the way to its wit's end. You need to leave room for situations like these so you're capable of surviving this storm that's brewing and you can make it out in one piece, so to speak. So again, I appreciate you guys for watching this video. I made it a little bit shorter because I just really wanted to get straight to the point with the situation that's happening in Toronto with the housing market and enlighten you guys a bit for those of you who are not really keeping up with it. Thanks again, and I'll see you in the next one.